What is Dakota Research? It's a brand new user interface focused on helping due diligence analysts manage the enormous amount of information around private funds, new funds in the market, funds currently fundraising, all the Form D information around funds, Form ADV around fund of funds. There's so much information. We've built in CRM-like capabilities so you can enter in all the investments that you've made and you can follow those. That means anytime there's a change to that fund or that firm or portfolio manager leaves, you get an alert at 5 o'clock each day. You can enter all your investments, all your call notes, you can enter your proprietary contacts, you can enter anything you want, just like a normal CRM. Then you can run reports. You can run existing investment reports, and then you can run prospective investment reports because you can create opportunities against the funds that we have in the database. And if for some reason we don't have a fund in the database, you can add one. So it's basically a tool that allows you to manage the enormity of this information, of which we're doing 99% of the work, and we're just giving you a place to go view that information, read the information, and then enter your own information against that. You can enter contacts, you can enter accounts, you can enter funds, most of which we're already going to have. And then what we do in the background is attach all this additional information to those funds as time goes on. When there's news, when there's events that happen, it gets attached. So we're doing all that in the background for you. Then you can use this as the place where you view, track private fund information. As I said, new funds that are being formed, first closes, final closes, all that type of information without having to lift a finger or enter anything. The only thing you enter is you create opportunities, you can enter your call notes and your contacts. So if you want to book a demo, go to dakota.com and you can book a demo. It's an unbelievable platform. It'll save you so much time, and it also allow you to uncover new investment opportunities. Go check it out.
Hello, everyone, and welcome to the first episode of the Dakota Private Fund News Live. This is the newest show coming out of Dakota Studios. We are pumped to be launching this on the heels of Dakota Live's success over the past 6 years. If you haven't checked this out so far, we'll just run quickly through what the agenda is going to look like for this show. We'll be doing this weekly on Fridays. Starting out, we'll do our first segment where we'll go through news and trends from the private fund space. Today, we'll talk a little bit about private equity news, everything from earnings to fundraising highlights to key deals, some people moves, and some job openings. On the second segment of the show, we will do a topic deep dive. Today, we're going to talk about secondaries, but in the future, we may break down a metro area. We may talk about, healthcare investing. Who knows? We're very excited to be bringing different segments there. And then finally, insights in action. That's going to be our third sort of miscellaneous section, if you will, where we'll talk about upcoming events. We'll go through notes that we've heard from the week, and then we will do Q&A. On the Q&A topic, we are accepting live Q&A throughout this episode. Feel free to throw them in the chat, and we will be answering them in the chat as well. We have our trusty team on that right now, so we look forward to hearing all those questions. But first, you're probably wondering, who are these guys in front of me? So you have myself, I'm Pat Tighe. I've been at Dakota since October of 2020. I've sat in a sales and go-to-market seat. And then since 2023, I've been the head of product for Dakota Marketplace and now Dakota Research. Chris?
Yeah, Chris LeRoy, Director of Investment Research here at Dakota, work alongside Pat on rolling out Dakota Research, which is our newest product that we're offering today, dedicated to the due diligence analysts that work at various foundations, endowments, pensions, consultants, and the like. It's a workflow tool that we're really excited about. And it's also the engine that we're using to kind of create this show and the content behind this show. So it's super exciting and always great to be with you, Pat.
Yeah.
To talk about all things private equity.
Yeah. And that's an exciting note too. Everything that we're covering today, you can learn more about in Dakota Research. You can book a demo on our website if you're interested. And again, ask any questions in the chat. Can't encourage that enough. Let's jump into it though. Let's talk about our first segment for today. It's earnings season. Everyone knows that these large firms are disclosing their earnings. Today, we'll talk a little bit about Blackstone. I think we have KKR on the list. Who else are we going to talk about today?
Yes, so super busy week in the earnings front. There's about over $550 billion worth of market cap reporting this week that are private equity, publicly traded private equity fund managers. January 30th, we had Blackstone in Tighe Group in the UK. February 4th, we had Apollo Global, KKR, and Hamilton Lane right down the road from us.
Yeah.
February 5th, Ares, Evercore, and Moelis. And February 6th, Blue Owl Capital and Stepstone Group. So full slate this week, lot to get through. We're going to focus today just on the top big three. So Blackstone, KKR, and Apollo. Blackstone reported their Q4 results and reported $200.2 billion in distributable earnings, up 56% year over year. Tremendous growth in that number. Fee-related earnings hit an all-time high of $1.8 billion, and their assets under management climbed to $1.1 trillion. That's making them now the largest alternative asset manager in the world.
Yeah.
So incredible growth for them in 2024.
Yeah. And Chris, we've been hearing just in some of the other content we're seeing, private credit is all the rave, but with the growth here at Blackstone, it feels like real estate has been something that's really been driving their growth.
Absolutely. So for starters too, Blackstone's seeing massive inflows from their clients. So $57 billion in Q4 alone, $171 billion for the year. The infrastructure business was a major contributor, which we don't often get to talk a lot about, but it's becoming a very large business for Blackstone, with $1.2 billion in fee revenues, with their private credit and insurance divisions brought in over $100 billion in inflows. You mentioned real estate. Real estate remains a huge focus and a critical asset class for Blackstone. Despite market headwinds, Blackstone deployed $25 billion in real estate in 2024, a 70% jump from last year. They're calling a bottom in real estate values and expect a gradual recovery through the back half of 2025. So more to come there.
Yeah. Can't really talk about anything these days without talking about AI either. I think it's worth noting, just in accordance with all this growth, Blackstone does own the largest data centers for AI, just globally, $80 billion in value for that business that they're running. And then this is sort of leading to that infrastructure and cloud computing that's constantly growing is helping with their growth.
Absolutely. And it touches all parts of their business, the private equity business, the credit business, the real estate, the infrastructure business. With AI demand skyrocketing, they expect infrastructure power and cloud computing investments to surge, which is why they've made such a big push and play into those areas. The other point of note from the earnings report too is they see strong IPO and M&A markets in 2025. Another thing to call out too, which we covered in Dakota Research on the newswires, Blackstone tapped Deutsche Bank for distribution for Evergreen, their private equity fund. Blackstone's partnered with Deutsche Bank to expand the global distribution of its Evergreen private equity fund, Blackstone Private Equity Strategies Fund, or BXPE. It's aimed at qualified investors. The collaboration, confirmed by BXP CEO, aligns with Blackstone's broader strategy of partnering with major financial players to strengthen its distribution network.
Yeah, it's exciting, especially as, that private equity division of Blackstone has, I think it's roughly like $34 billion in dry powder. They reported at end of year last year. So to see them, with the Evergreen Fund, they're going to continue to grow and grow and grow. And it'll be interesting to see how they put that money to work, which, we'll definitely be covering here on the show.
Absolutely. Also of note, this week, Apollo reported earnings. They reported a record-breaking year with assets under management surpassing $750 billion.
Wow.
That was a 15% year-over-year increase, fueled by $152 billion in inflows and $222 billion in originations. Strategic capital allocations was a priority for the firm, with $1.2 billion in share repurchases and a 10% dividend increase for 2025. Looking ahead, Apollo noted being focused on scaling its global wealth platform. Another point that Blackstone made during the quarter, continued to be a key focus area for those businesses, where they're expanding origination activity and strengthening the capital solutions business. So they're positioning themselves as a leader in the alternative asset management, but also providing these new solutions to high net worth and also retail investors as well.
Yeah, and we're seeing that more and more, whether it's, Ardian having their, biggest capital raising year ever last year from, the private markets in the private wealth division. Just more and more of these large firms have traditionally been so hyper-focused on institutional investors are moving downstream. It says a lot about, I think, the wealth transfer with these clients at these private wealth managers demanding access to alts and, indeed demanding access to really high-quality alts that you get from a Blackstone, that you get from an Apollo, you get from KKR, which we'll talk about next year.
Absolutely. And then a few other figures to call out for Apollo too. They're sitting on about $61 billion worth of dry powder, split practically evenly between their credit and their equity business. So a lot of firms now are talking about deal-making activity picking up in 2025. A lot of dry powder to deploy there across both of those businesses as well. You mentioned KKR. They reported Q4 results as well. They delivered strong financial performance for the year. with fee-related earnings, total operating earnings, adjusted net income all growing over 35% year over year. So reflecting an overall improving operating environment. The firm also achieved a record-breaking $100 billion in capital raise and $1 billion in capital markets revenue for the first time, which highlights their expanding investment execution capabilities. The firm noted 2025, just looking ahead, KKR is doubling down on strategic holdings, increasing ownership stakes in USI Insurance Services, 1-800 Contacts, and Heartland Dental, reinforcing its long-term growth strategy. As of Q4, KKR's total AUM stands at $638 billion, reflecting a 15% year-over-year growth. We could move to IPEM conference. KKR was also in the news this week. Alyssa Wood, partner at KKR, highlighted this vast untapped potential in the private markets, and we were just talking about this again with Apollo and Blackstone, calling out $190 trillion in global individual wealth as being the opportunity, the TAM, for alternative asset managers to, approach to basically bring in new clients and new business for the private equity strategies that they offer. Significant room for expansion. It's kind of hard to wrap your mind around that number, but just these are the kind of numbers that the firms are starting to talk about. We talk about adoption of alts from retail investors.
Yeah, and I had the chance to attend the IPM conference in Paris. That's right, last August. It was great. Highly recommend our listeners check it out. It was huge, the Paris event, and I'm sure the Cannes event was, similar, and I'm sure it's no film festival, but probably still pretty cool.
Yeah, and they also mentioned too just the challenges in manager selection, the challenges of keeping information organized for basically this new community of investors that are adopting alts, and just it's a different flow, and advisors being able to get up to speed on strategies that are currently in market too was another key theme that KKR called out at that conference. Maybe we could move to pivot to a little bit about fundraising highlights too. There's a number of sort of strategies that closed recently that were notable. Maybe you would like to take a stab at a couple of those.
Yeah, definitely. So first, we'll start in Seattle, birthplace of punk music for what it's worth. But nothing punk about this with Medrona. Sorry for that transition. It was just kind of fun. I had to do it. Medrona has raised $700 million across 2 recently closed funds. If you aren't familiar, they were founded in 1995. They were an early investor in Amazon.
Right.
Pretty good win there. I think we've all probably heard of that one. They've also invested in companies like Snowflake, UiPath, Redfin. Is actually the real estate company. And then they have just, as I mentioned, closed their largest fundraise in history, $770 million for Fund 10 and Acceleration Fund 4. This is the largest capital raise, like I mentioned, in the 30 years that Medrona has been around. They're targeting pre-seed, seed, and Series A companies for Fund 10, and then the Acceleration Fund 4 supports companies at the Series B and Series C stages, helping them scale further. I'd probably attribute that something similar to like LaSalle. LaSalle has their Spark fund. I love all those names: Acceleration, Spark. There's a bunch of these.
Yeah, Medrona too. I mean, kind of really household name, has been in venture investor for a long time too, and so being able to successfully raise capital in this environment, and just as a testament to the brand's strength and also the kind of sectors that they're investing in. So applied AI, developer tools, cloud, AI-enabled biology, and enterprise and consumer markets, kind of that's where their core focus is today. And so just continued demand from investors. And they also have you mentioned that Seattle presence too. So, and they've also expanded a couple of years ago, I guess in 2022, into Palo Alto. So increasing their exposure on the West Coast, but just wanted to call out there, very successful fundraise by that firm.
Yeah, another just to call out, we'll stay local to Silicon Valley actually here with Continuity Partners in San Francisco. They have raised $425 million for their first ever fund, for their debut.
Yeah, this one jumped out too because it's a first time fund. Again, the fundraising environment is continuing to improve, but as a first time fund manager, there's always, a number of challenges getting your story out there. This fund raised $425 million, which is a great first close, and it's a lower middle market buyout firm. The partners came from Industrial Growth Partners, Dan Delaney and Brett Johnson, where the firm combines investment experience with hands-on approach and operational support through this co-op program too. Mm-hmm. So very much industry focused on the industrial sector, including advanced manufacturing and infrastructure solutions, industrial tech, critical industrial services. So really interesting strategy to follow there.
Totally. And they're already putting money to work too. So just from that raise already, they deployed capital and made a notable investment in the USSC, which is United Safety and Survivability Corporation. That funding that they provided to them was helpful in the acquisition of a Swedish-based suppression system manufacturer that USSC went and picked up. So helping just with these add-ons, helping with sort of, strategic operations for these firms that they're investing in.
Yeah, moving down from the West Coast down to Austin, another great music town. Blue Sage Capital Fund 4 successfully closed its fourth fund at $618 million. Surpassed its $550 million hard cap, which says a lot about the team and the investor support there. This firm focuses on lower middle market investments, environmental solutions, niche manufacturing, and specialty services. It doubles the size of its predecessor fund, making it a major milestone for the firm there.
Yeah. And then I'll just talk a little bit in Chicago here. It's February. They're all cold up there, but raising money, and that's hot. Cut that. I just want to talk a little bit about a Chicago-based private equity firm before we wrap this segment up. Frontenac, they have closed their 13th fund. You just mentioned, Blue Sage, who had exceeded their target. Frontenac did as well. So they had a $700 million target, and that 13th vintage raised $900 million. Very exciting. As you all know, fundraising is a very, very difficult job. So we like to call out wins like that, which is just exciting for them. They are a lower middle market buyout firm focused on consumer, industrial, and services sectors. The fund had a really strong backing from both re-ups with existing investors to new investors that include pension funds, endowments, asset managers. We actually have coverage of who those names are in Dakota Research. So if you are listening to this and are interested to see, who's participating in fund allocations, we have something like 50,000 underlying investments by pensions, and then another, large amount by endowments and foundations, which is exciting.
Absolutely. Maybe we could transition next to talk about a few key deals that have come across the wires recently. Specifically, one where we have kind of in our office today, Spindrift. Griffin Investors acquired a majority stake in the company, was attracted basically to their fast growth sparkling water brand, which actually uses real squeezed juice. I've been a big fan of the
What's your favorite
brand.
flavor?
It's actually this flavor here. The lemon flavor, unsweetened. It's just a nice pick me up during the day. But, we're obviously big fans of them here at Dakota. So as part of the deal, interestingly, former Boston Beer Company and Pete's Coffee CEO, Dave Berwick, well-known consumer CEO executive, has been appointed to run the firm. He'll be replacing the founder, Bill Creelman, who will transition to chairman of the board while retaining significant equity stake. Spindrift has experienced rapid growth, tripling in size since 2020. This has been fueled by consumer demand for clean and unsweetened beverages. Griffin Investors is also known for backing high-growth consumer brands and sees substantial potential for their further expansion. The deal is expected to close in the first quarter of 2025, but just, again, really interesting deal. The financial terms were around $650 million, I believe, is what the transaction took place at. Griffin's got a couple of people that will be joining the board. In addition to them, there's also a number of advisors that worked on the deal. Morgan Stanley and Lazard were advising Griffin, and Piper Sandler and JP Morgan were advising Spindrift.
One thing just to call out too, with Dave Berwick at the helm as CEO, Dave, if I'm not mistaken, was the CEO of Boston Beer Company.
That's correct, yeah.
Right around the same time that they made the acquisition of Dogfish Head, which is near and dear to both of you and I, Delaware natives. So, it's no new task for Dave to build a company that has a really, really strong brand and a really high quality product in Sam Adams. And he's done this sort of growth by acquisition approach in the past. So it'll be interesting just to keep track of Spindrift and see how they put the new funding to work.
Absolutely. As long as I've got the lemon flavor, I'm fine with that.
Don't get rid of the lemon flavor. They already do Spindrift hard seltzers. So maybe that could be something else, just bringing on someone who has experience in the beer industry.
There you go. Moving on, Triumph Group actually also has a Radnor location right here in PA. They're set to be acquired by Warburg Pincus and Berkshire Partners in an all-cash take-private transaction that valued at approximately $3 billion. The company designs, develops, manufactures, and repairs spare parts across a broad portfolio of aerospace and defense systems and components. The company serves the global aviation industry, including original equipment manufacturers and the full spectrum of military and commercial aircraft operators. Interesting, aerospace, that industry, continue to read about the growth and changes going on there. Obviously, Warburg Pincus, Berkshire Partners, two really well-respected, longstanding private equity firms, taking that company private. Another deal to call out, Ridgemont Equity Partners has invested in Strata Information Group, or SIG, a leading managed services provider for the higher education, and facilitated SIG's acquisition of BHA Technologies, strategic partner of Euclidean.
Yeah.
Partner aims to accelerate SIG's growth in IT services for higher education institutions.
Ridgemont, a great firm in Charlotte. Very, very great firm. Obviously, there's a ton down there in Charlotte with TrueBridge, Ridgemont, all these firms, little hotbed down there.
Absolutely. And then the last deal, just call out, this is one where it's a venture-backed company called Helion Energy. A fusion energy startup has raised $425 million in a Series F, which was led by SoftBank Vision Fund 2. It also received the backing from Sam Altman and Peter Thiel's Mithril Capital and Nucor. The funding boosts Helion's valuation to $5.5 billion and will accelerate the development of Polaris, its next generation fusion reactor aimed at generating electricity. The company has a power supply agreement with Microsoft for fusion generated electricity by 2028. The funds will help bring semiconductor capacitor production in-house, replacing supply chain dependence. The company is expanding its 450-person workforce by 100 employees to meet its ambitious timeline. Unlikely traditional steam turbine fusion models, Helion uses electromagnetic induction to capture energy directly. So just incredible, very dynamic company helping solve kind of the energy transition needs that are out there.
And if you are in chat and you can explain how electromagnetic induction works, put it in the chat because I'd love to learn.
And I as well.
That's not in my bag, that's for sure.
Yeah. So maybe moving on to the next segment too, we're just going to talk about people moves. There's been a lot of activity after the first of the year. We've just seen a lot of different changes. Both people join new firms and a lot of promotions too across the private equity industry and also within the allocator community too. So maybe we could start there.
Yeah, one on the allocator side to call out, Johns Hopkins University has landed a new CIO. That is going to be Michael Berry. He is coming over from Georgetown, where he was the CIO of the Georgetown Endowment, which managed $3.7 billion. Johns Hopkins, roughly $13 billion. So his work is maybe going to 4x in size based on the amount he's going to be managing now. He's succeeding Jason Perleone following a few month-long search. Jason, who stepped down in June 2023, and then the team has just been looking since then. I wonder when I see this, Georgetown, Hopkins, DC, Baltimore, does Michael Berry have to move, you think? Or does he live in the same home?
It's a great question. But he is, interestingly, a Johns Hopkins cool alumni. So
maybe he's always been there.
Yeah, absolutely. And what a great role to step into as well, because you having obviously an attachment to the organization and the mission behind it. Pretty cool seat to sit in.
Yeah, that is very cool.
Moving on, Industrial Partners, they announced a number of promotions. 4 professionals moving to partner. Nathan Dickstein, he's now head of aerospace leasing, leading acquisitions of commercial business and special missions aircrafts and engines. Sounds like an incredible area to spend your day in there. Again, aerospace continuing to be an interesting theme there. That Industrial Partners also does aerospace leasing and specialty finance as well. So Nathan will be help supporting those efforts there. Beckett Jackson will focus on investments in aerospace and defense sectors as well. Tyler Rowe, founder of AE Ventures, the firm's venture capital platform, investing in high-growth startups within national security, aerospace, and industrial services. And lastly, Lawrence Vigient Langlois specializes, I'm not sure if I got that right, but specializes in business development and portfolio